Hello traders, Gary Wagner here, approximately 12:45 in Honolulu, 6:45 in New York. It is Thursday. It is June 24th, 2021, and this is the daily report for gold and silver. We saw both precious metals, gold and silver, sell lower today, and that came concurrently as Biden announced an infrastructure program that he had made a deal, and Yellen announced to Congress that they need to raise the debt ceiling yesterday, which to me is extremely alarming. None of this seemed to matter to the precious metals traders as equities ran to all-time highs. That's the only explanation that makes sense to me. We'll talk about that and technical levels during the show, which begins now. Speaking outside the White House today, President Biden announced that he has made a deal in regards to his infrastructure program. That resulted in tremendous rises in the NASDAQ composite, gaining about 0.7%, the Dow Jones Industrial, which gained about a full percent, and the Standard & Poor's. The dollar was basically neutral today, very fractional gains, and the net result was it pressured the precious metals. Currently, gold is trading down $8.30, about 0.5% at $1,775.10. This first chart that we are looking at is a daily candlestick chart of gold, although I do have it compressed so that you can see the beginning and end of the data set we're using, because I'm starting at the highs of 2,088 that occurred in August of last year, down to the first of two lows on this double bottom here. So it is reversed. In other words, it is not the 61.8% retracement, but the 23.6% retracement that is important. And they align pretty perfect. In other words, we see a major and critical support level that gold needs to hold at an area between 1760 and 1770. And traders, after the dramatic price decline that occurred last week in gold, and that was really a $47 day, followed by a $87 decline, followed by a $10 decline that occurred on Friday of last week, taking it to an intraday low of about 1760. That is this candle right here. Monday, we saw it open below this critical price point, closing above it for the entire week, Monday through Thursday, which confirms the support level of 1770. It might be temporary at best, but at least for this week, this particular price point is held. However, there is something that is alarming and is concerning me on a technical basis. And what that is the fact that when we look at our moving averages, the 200-day is currently in yellow. It's a dashed line. The green line represents the 50-day moving average. You can see that they are absolutely moving closer together, possibly to form a death cross, and a death cross between the 50 and 200-day is considered a very, very strong technical signal, and from the current look of it, seems imminent that we will see a death cross between the 200 and 50-day moving averages. Silver futures are currently trading down approximately 0.4% at $26 after factoring in today's 11-cent decline. We are looking at a daily area chart based upon the close of silver futures. It is clear and easy to see that there is resistance at 26.11. That is the 50% retracement that occurs at 26.11.8. and effectively need to close above that until we can see any kind of momentum begin to build. When we look at the Henkin-Ashi charts, what we can see is that the powerful sell-off that began at approximately 27.75 had these large red candles, no upper wicks. That means that the downtrend is strong. We can see that over the last two trading days, because this represents today in Australia, we have seen that wean considerably, and it appears as though it wants to pivot to the upside, or at least trade in a consolidated sideways pattern. Copper has definitely been trying to make a comeback, although it sold off by about 2 cents today. Over the last 3 or 4 trading days, we can see that it has come off of the lows of $4.07 and is currently at $4.31. After looking at the precious and industrial metals today. It does appear as though they are consolidating. In the case of gold, we can see on our Henkin-Ashi chart that we have these small red candles, and the strength, like silver, of this sell-off has been coming to a conclusion. We are maintaining a neutral stance with no active trades in gold, silver, or copper for that reason. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.